Amalgamation study, Euro futures using a 15-minute time frame. As the title suggests, amalgamation, we are going to use some of the signs of weakness that we have covered today. First of all, to keep things simple, this is an upthrust of this high, and this is an upthrust of this high. However, as usual, we can dig a lot deeper. So we rally to A with increasing volume and wide spreads. Suffice to say, this is buying of good quality. Then for whatever reason at A we halt and we react. As we react, we withdraw in resistance. We trade sideways, we come down, we actually spring here, and then we rally back to test. Now, what do we note about this test in action? This is our upthrust. However, the close is above resistance. So is this an upthrust? Yes. Firstly, we have a huge spike in volume, yet unable to close firm. We close way off the highs. We close in the bottom half of the spread, and we only net a few ticks to the upside with all this volume. So considering the volume to the previous bar, think about this. This spread was made with this volume, and this spread was made with this volume. We know that this upthrust bar must be a case of effort versus result if we compare it to the previous bar. For all intents and purposes, if there was no selling on this volume, we should be printing a bar like so, not like this. So we only net that much progress with all this volume. And this volume is also much higher than our original anchor point at A. So why are we not breaking through? Then boom, don't forget this is a 15-minute time frame. Then for the next 3 bars, which is 45 minutes worth of trading, there is no upside follow through, no continuation. And in fact, this bar here is a weak close back under resistance. So this action here, we would consider an upthrust. This action here is a poor break. We have high volume than the anchor point. We're unable to rally. It's a case of effort versus result. And then we trade back under resistance. Can we trade this upthrust? No. Very difficult to trade. However, this bar here, I know it's very hard to see, I apologise, I have to scrunch the data to fit it on the chart, but this bar here is a no demand. And the second bar, what do we know? It's kind of a 2-bar reversal action. Of course, this isn't picture perfect. However, we have a spread like this, followed by a spread like this. So we do engulf it in a way, and we accomplish a great deal as we close under the local lows of these 45 minutes worth of trading. This area is incredibly weak. We have an upthrust, which is effort versus result. No demand followed by a 2-bar reversal action that closes under the local lows. So we can short in here very, very comfortably. And we must note, with all this volume, we are unable to break the anchor point. Our spider sense must be tingling, alarm bells ringing. There is also something else here. If we analyse the bars from A to the upthrust, what can we note? Well, all the wide spread bars with volume are down. Can you see this? This is a subtlety. This is saying, you know, the sellers are showing their hands. All the high volume bars are wide spread down bars. And when we rally to the upthrust, look, it's nothing in comparison to the selling quality. Now there's also something else here. What's this action here? These 2 bars, this is a perfect 2-bar top reversal. This bar breaks above local trading, 1, 2, 3, 4, 5 bars, so an hour and a half, and this bar pops its head above to reverse and close weak. So this is a lovely 2-bar top reversal, followed by a gap. See, this is hinting. When we take into consideration this action, this is more weakness entering the market. So when we come up to this area, okay, we've noticed that all the down bars, all the widespread down bars have all the volume. As we rally up, volume decreases, okay, which is not strong buying in comparison to the selling. So when we have this up thrust, okay, we can't trade it on the close, but when we have a no demand and a 2-bar reversal of sorts at resistance with this effort versus result up thrust in the background with all this volume higher than an anchor point, and we can't have any continuation to the upside, we have a story of weakness. We can take the trade very comfortably. From the up thrust, we come back down and we push up to B, which tests the up thrust over here. Unsurprising. Why? Well, this is very high volume, and as we know, the market likes to test high volume bars, and this is very high volume. Instantly from the test, we drop down very hard to make a lower low. Then as we rally back up, we get some decent volume, no denying it, and then we go sideways with very low volume. And then look what happens here. We up thrust once again as we test this swing high from B. Now what's important about this test here is that we're not testing this resistance. We're not up thrusting this. We're up thrusting this swing high. Now that's additional weakness. Why? Well, because for all intents and purposes, the market should test the main resistance line, but is unable to do so. So we have a selling area of sorts here. We have this resistance and this resistance. So when we pop our head up to reverse and close weak with this spike in volume, now this is an up thrust that we can take directly on the close. This is a very, very good up thrust because of the additional weakness from making the lower high. Here, we're making the lower high from this resistance here. Okay. Now there's something else on this chart where we can dig a little deeper using structure. Here we go. We can add in this line here. This is resistance, resistance, resistance. We break with a wide spread up bar which validates, so that is another plus for this level. And look at the action here. We come down, we try to hold, we have another wide spread that manages to break through, so that's another positive for this level. Then as we get to B and we dip above to reverse and close a week back under, now this is a trade we could take because this is a working level. This is how we can use structure to our advantage. This is decent resistance. Like I've said, we've just validated 1, 2, 3, 4, 5. So as we come here and we pop our heads above to reverse and close weak, it is an aggressive trade. However, it is valid. There is no reason why we shouldn't be able to take the trade at B. It's a selling zone. Not only that, when we come back to this area, look at this price action here. We can see that this level we draw from here acts as resistance with multiple touches, unable to hold a close in this area. And when we print the up thrust with this level in, it becomes a no-brainer. We must gain all the we gain a lot more confidence from this up thrust adding in this level. And if you haven't drawn it in by here, we must draw it in after B's printed because we can see the rejection. So when we come back to test and we can see price hold, knocking its head against resistance, unable to break, then we get an up thrust bar and again unable to break. We have to short this bar. Very, very comfortable short. From the up thrust, as we fall, bang, supply, supply, supply. we can see that sellers are in this market once again. Now, upthrust 2 here is different to this upthrust over here. Here we have a no demand and a 2-bar reversal action to enter. Here we have to trade the upthrust. Okay, the market gives very little opportunity after to get involved. We could draw a local level support in, and as we break, we could let the market pull us in. Nothing wrong with that, a valid way to enter. However, the upthrusts are different. But the upthrust to trade is this, because we have this level of structure in play and this all in the background. There is something else to this chart which is very, very important. It's how the selling and buying waves have swapped roles. We can see the transference of quality shift from the buyers to the sellers, and it's absolutely fascinating. We will discuss this in detail on the next session. And this type of analysis is called comparative analysis. And this is a personal favourite. This form of analysis, we can see the buying decrease in force whilst the sellers are increasing in force. So what do I mean? Well, look at this. From A, we come down. Okay, fairly choppy. Agreed? Then when we come down from this upthrust, we come down a little stronger. You know, there's better selling quality on this. Then from B, look how we come straight down. Sellers are in control on this wave down. So we could say from this wave 1, from this wave down to 2, to this wave down to 3, that the selling quality has improved. It's getting better. So the selling quality, we could put a plus because it's increasing. And we can visually see from here to this, we can eyeball it. We don't have to do anything fancy here. We can note the wide spreads, ease of movement to the downside, and we don't do it on particularly great volume. That shows you there's a lack of buying friction in the market. Okay, selling waves are increasing in quality. Now let's compare the buying. So from here, we push up, fairly good. Then from here, we push up, not as good, and we make a lower high. Then this drive up. Now where has the buying quality gone? We can see this very, very easily. The buying quality has decreased. So the buying has decreased, put a negative, whilst the selling has increased its quality. And we know this by the time we get to here. Selling increased, buying has decreased. So when we get to this action with the upthrust and this structure holding, this becomes an extremely powerful setup. And this is why I like to use comparative analysis. It's a skill very much often overlooked for even many Wyckoff traders. However, it's a personal favorite. And this is a good chart that will introduce you to this concept. And I hope you can see with clarity. Although it is a new tool in our skill set, it is incredibly powerful, especially when we can interweave it or amalgamate it with all these other principles. This is how we get good at trading, and this produces an extremely high odds setup with this upthrust. So we are not blindly trading this upthrust. We are taking into consideration all of these background conditions. And we can see the sellers are increases, whilst on the other hand, the buyers are decreasing in quality. Price is unable to break through this level of resistance, and we have two levels. Then we upthrust. Beautiful. Absolutely beautiful. Must trade. Okay. Good. Apologies, it may appear as if I'm ranting and I'm repeating myself, but these are very important concepts and principles to understand. And for me, they're as clear as day, and I want you to understand all we're doing All we're doing is trying to find the demand-supply imbalance. And here, buying is decreasing, negative, seller is increasing. So we get two cases of positivity. Then we get confirmation with an upthrust at structure. This is a wonderful, wonderful trade. Okay, this is powerful, powerful trading. And this is how we get good. I'm very passionate about this methodology, and I hope I can convey these principles and concepts to you in the way that they should be presented. I'm holding nothing back. There's no trickery or skullduggery within this methodology. You can see it clear as day, live, bar by bar, as the market unfolds. Good. On to the next stuff.